What's up guys, welcome back to InvestingPH. Now I am a very big fan of passive income. I want my hard-earned money to work for me. Just imagine making money without doing anything. How lovely is that? I believe that creating wealth this way is the key to growing my money a lot and would eventually lead to financial freedom. It was even pointed out by the greatest investor Warren Buffett how important it is to utilize passive income. He said, if you don't find a way to make money while you sleep, you will work until you die. With this idea, I've diligently studied ways to earn passive income, and this is where I found a strategy of dividend investing. So I've carefully handpicked companies to invest in whom I believe are strong ones that will pay me dividends consistently. And I've been doing this for 4 years now, since I started in July 2019. And so far, I've gotten quite a good amount already. And the thing about dividend investing is, I just love the idea of earning consistently without me even selling any stocks. So I just find a good company, buy it, and hold for a long time. I also find that this strategy is a good choice to use since the nature of the Philippine stock market is it stagnates for a long time in some decades. I've shown this in my last video that there are years our market doesn't move for almost 15 years. Actually, right now we are experiencing it again. Our market is still at the same level as where it was 10 years from now. But with dividend investing as my strategy, even when the market doesn't move for a long time, I am still earning money, which is so far, I'm doing quite well. I've beaten the PSCI or the Philippine Stock Exchange Index by a lot, and most of my gains came from the dividends I got. Although 4 years isn't enough to prove that this strategy will do well in the years to come, it's still quite a good feeling that no matter what the market does, you are earning money consistently. But here's the catch. Is this the only way for dividend investors to earn dividends yearly? Is there a way for me to get quite a good amount of passive income that can match what I get here without investing in stocks? Well, in the Philippines, there is one, and that is Pag-ibig MP2. The greatest advantage of this, your money doesn't fluctuate over and over again every month or year. All you do is invest in it, your main capital doesn't go down or up, but every year you gain dividends, and it also compounds, which can earn you more dividends the next year. And the best part of it, your money is guaranteed at the end. Oh, and the gains you get are also tax-free. So if you think the returns are small, well, you guessed it wrong. The modified Pag-ibig MP2 had an average dividend rate of 6.02% for the past 11 years, which is a great return. The highest dividend rate ever recorded was in 2017 at 8.11%. So just to give you a clue that the 6.02% average dividend rate is a good one, if you compare it to the index 10-year return, your money would still be negative up to now if you did a one-time investment in 2013. While if you invested in the Pag-ibig MP2 fund, your money would have surely grown and your money is also compounded along the way, giving a much bigger return than 6%. So for this video, I wanted to know, if I just invested all my money in Pag-ibig MP2 for the past 4 years, would I do better? Or would my portfolio's current return beat the Pag-ibig MP2 fund even while the market is still nowhere near recovery? By the way, if you haven't yet watched my video last time about Pag-ibig MP2, I explained there in detail what this fund is about. Today, I'll just quickly explain how you get dividends from MP2 compared to stocks. In MP2, to compute your estimated dividends, we have what is called the dividend factor. It looks like this. For each month, the dividend factor is different. The later you put your money in the year, the smaller the dividend factor is. Now this is important to take note of because for example, you invested 1,000 pesos in January, assuming they release a dividend rate of 6%. The estimated dividends you will get for your investment in this month is 60 pesos, which is the 6% of 1,000 because in that month, your dividend factor is 1. This means the 6% or 0.06 is multiplied by 1, which gives you the whole 6%. But let's say you again invested in February. Since the dividend factor for that month is 0.92, then if you multiply it by 6%, would only give 5.52% instead, giving you lower dividends. So apply this to the succeeding months, the lower the dividends you get. That's why in Pag-ibig MP2, you get more dividends if you did a lump sum investment in January rather than spreading in different months, because the later in the year you put it, the lower the dividends you get. Like this example, 12,000 spread every month would give a total dividend of 390. But if you put the whole 12,000 in January, you get 720 pesos. And in the next year, since you already have a total of 12,720 pesos, this is with the dividends. If you did another lump sum investment in January, your dividends would compound as well, giving you 1,483. This is assuming you still get 6% dividend rate, while in comparison to spreading the 12,000 in different months, you only get 1,133. So that's just about how your dividends are computed for Pag-ibig MP2. For stocks, we have no such dividend factors. Let's take the company Philinvestland for example. In 2022, they gave a dividend yield of 6.53%, which they paid in June of 2022. But what we have to take note of is the ex-dividend date, which was on May 5, because as an investor, you have to buy the shares of Philinvestland before the ex-dividend date. So this is where the fun part begins. Even if you buy one day before the ex-dividend date, you get a whole 6.53%. Now in our country, we are taxed 10% for dividends. No matter the amount, it's 10%. So assuming you invested 10,000 and you get 653 pesos, 10% is tax, which your net dividend income is 587.7. So from the 6.53% yield, your net take-home income would drop to 5.87% after taxes. Unlike for MP2, which is tax-free. But that's the difference. There is no dividend factor. Just buy it before the ex-dividend date, you get a whole amount. Simple as that. But do take note that some companies spread their dividend payout 4 times a year. Like Globe has a dividend yield of 5.84%, so to get a whole 5.84% for that year, you need to buy before the first round of pay, which is usually in Feb. But again, if you put in some money after, you still get the other dividends they will give you. Just always remember to buy before the ex-dividend date for the remaining payout. Anyway, that's just about the difference between the dividend payout of the two. And of course, in stocks, you also get a chance to grow your capital besides the dividends. Now, so how would my portfolio compare to the fund? Well, I track Pag-ibig MP2's dividend rate and my monthly investments starting in July 2019 up to 2022. Since for my money in 2023, of course, there are no dividends yet. So here's what I got. After 4 years, my total invested money of 1,696,900 would grow to 1,871,299, which is a 10.27% total return in the Pag-ibig MP2 fund. Now since I didn't lump sum my money, I got a lower return compared to someone who put in 1.6 million in July of 2019. But I didn't have that money to start with. I relied on my monthly income to get to 1.6 million. So the total dividends I got is 174,399, which is a lot. Where would you even get that money? Now, if I compare this to my portfolio, here's what it'll look like. My portfolio's value right now is just slightly higher. So imagine how great investing in Pag-ibig MP2 is. If I compared the dividends I got from my stocks, my dividends only amount to 141,792. This is already after taxes. I just got ahead of the returns of MP2 because of some contribution of capital gains. So for a safe investment, the returns aren't bad. My portfolio is barely keeping up its lead, and there are a lot of times when I'm even underperforming the MP2 fund. Just look at this chart of the fluctuating returns of my portfolio. During the biggest drop of the market in March 2020, this is when the pandemic struck, my portfolio was negative 36%. Now if you notice the returns of the MP2 are getting smaller as months go by, because as I put in money, the returns also drop because you only get dividends once a year. So that's why it goes down like that, then jumps up after receiving dividends. And as I put in money again, it slowly goes down until another round of dividends comes in. Now if I put in the PSCI, well, it's really trailing below the MP2's return. But I think a more fair comparison of the two is from when the MP2 fund started, which was in 2011. I'll save that comparison for some other time. I still haven't yet done the data for it. So this is the biggest advantage of investing in MP2. There is no volatility. Although stocks have the potential to grow tenfolds in the MP2 fund because of capital gains, but no one knows when that will happen, and if an investor invested in bad companies, he may even lose a huge chunk of his money. Unlike for MP2, your money's guaranteed in the end. This for me concludes if you're a dividend investor and don't like investing in stocks, then the MP2 fund is a great way to grow your money and may even lead you to retire early in the future. This fund is way better than keeping your money in banks, which gives you little to no interest at all. It's just sad that only few Filipinos know about this. It's a really great vehicle to let compounding grow your money, and it's a no-brainer to do. You just invest in it consistently, and since it has a maturity date, just put your money again after. So for those who don't know about stocks and wants to earn money from dividends, this is a good option. Or if you have some time to study stocks, then you may mix the two, have some invested in MP2 and some in stocks. This actually applies Benjamin Graham's principle. He's the teacher of Warren Buffett, by the way, of 70% stocks, 30% be put into safe assets like bonds. Since MP2 guarantees your money, so it's a safe asset. Or if you aren't a risk taker, 50% for both. You can experiment as to what suits you the most. So this concludes this video. I hope you've learned something, and if you did and still haven't clicked the like button, then I'd appreciate it if you show your support by clicking the like button before you leave. It really helps out the channel a lot. Thank you and see you in the next video.